Hello, my name is Devin McKenzie, the Market Analyst at Aluma Capital, and I'll be taking you through this week's CFD analysis from the 5th to the 12th of October 2017. The CFD analysis is a weekly commentary on the top 40 stocks on the Johannesburg Stock Exchange to keep the active trader up to date on the latest developments in the price action of each of these stocks. This commentary highlights key price levels, indicators of imminent shifts in momentum, possible breakouts, and other price actions that are worth noting and which may provide valuable trading opportunities. In order to get a general feel of how most of the stocks are trading in the market, one could take a look at the top 40 future index, which is a combined representation of the price action of the top 40 stocks on the Johannesburg Stock Exchange. A commentary on this index can be found on slide 12 of this week's CFD analysis. A weaker rand helped the index to break above the resistance at 50,000 points over the last week. The index is currently trading at all-time high levels, and it's difficult to say how high it will trade from here. The 50,600 level will now offer support on any pullback from current levels. A 1.618% extension from 50,600 points suggests that the next key level of resistance may be around 51,400. The commentary shows that the index has traded significantly higher over the last week, and one of the main driving factors behind this has been a weaker rand. At this stage, we do prefer long trades over short ones, but a warning is sent out that as soon as this index does reach a top, which may be around 51,400, it is likely to begin to pull back, and at that stage we'd be cautious of long trades. As mentioned, the local currency has affected the price action of the stocks quite significantly over the last week, and we expect this to continue in the week ahead. And to get a feel for what the currency may do in the week ahead, we can look at the commentary on the local unit, which is on slide 13 of this week's CFD analysis, and it reads as follows. The break above the upper boundary of the triangle at 13 Rand 40 cents over the last week resulted in further Rand weakness to 13 Rand 77 cents by Tuesday, which was the 3rd of September, before the Rand began to stabilize. While the Rand continues to trade at the 13 Rand 60 cents level, the bias remains in favor of further Rand weakness toward 13 Rand 90 cents. However, a move down towards 13 Rand 35 cents, which is the upper boundary of the triangle pattern, cannot be ruled out. This commentary shows that we do anticipate further Rand weakness in the week ahead, but a move down towards 13 Rand 35 cents can also not be ruled out, and this can be seen by the price action of the Rand over the last 3 trading sessions, where it has stuck around the 13 Rand 60 level. So if the Rand is going to weaken further, it would favor trades in resource stocks, and I'd particularly like to draw your attention to possible long trades in Anglo Gold and Goldfields. If the Rand strengthens over the next session, which is a little bit less likely, then I would like to draw your attention to the stock of Richmond, which may be setting up for a good short trade. A stock that isn't affected too much by the strength or weakness of the Rand is Growth Point, and you can have a look at buying that stock at current levels. That's your CFD analysis for this week. As always, if you're going to trade, please remember to use protective stop losses.